Hello, I hope you are doing well. My name is Jacqueline Vino from Golasso Learning Solutions, and welcome to the Genuine Learning blog. Today, we are going to talk about something a little different because rather than the FASB issuing a new exposure draft or a new ASU, they actually issued an invitation to comment on key performance indicators. So what we are going to discuss during this blog is just some of the background information about this. Why is the FASB issuing this invitation to comment? What are some of the key questions that they're asking? And also how it has been received by stakeholders thus far. We have a lot to cover during this blog. So with that being said, let's go ahead and get started. As you can see here, this invitation to comment was issued in November of last year, so still fairly recent. But the main thing that I really want to point out is why are we here in the first place? And all the way back in 2021, the FASB issued an invitation to comment on their agenda. So basically what the FASB was asking all their stakeholders is, what would you like us to focus on? And they received a ton of responses on lots of different things, such as digital assets, ESG-related disclosures, software, and tangible assets. But another thing that specifically investors were interested in was to have the FASB take a closer look at key performance indicators. So as a result of that 2021 invitation to comment, financial KPIs were added to the FASB's agenda as a research project. And as part of that research project, that is why we are here now. So they are trying to research, they're trying to go ahead and solicit feedback, solicit comments from stakeholders about these financial KPIs. And that's going to help the FASB determine where to go from there. Should it just remain as a research project? Should it become part of their technical agenda? Should we have a new standard on this? So that is what the FASB is trying to do. So you may be asking yourself, why were investors so interested in this? Why was this added to the FASB's research agenda? And once the FASB actually took a look at this, it does turn out that it was decently warranted. So basically in their research from 2013 all the way to 2022, what the FASB found was actually a pretty significant increase in the use of KPIs. And we have this chart here and it basically lists out the 5 most common financial KPIs that are being used. But what they found was with SEC filers reporting a financial KPI, it actually increased from 36% to 53% from 2013 to 2022. So a pretty decent increase. Same with the S&P 500 companies, they also had some similar increases. They went from 65% to 85% in the same period. So what we are seeing across the industry is a significant increase in the use of financial KPIs. However, though, a little consequence of that is we actually have reduced comparability. And the reason why we have reduced comparability is because there currently are no standardized definitions of KPIs. They do not exist. So once again, that is why the FASB is working on this right now. It does turn out there was some lack of comparability with these financial KPIs, and the FASB is just trying to determine where do we go from here. And that is just what the purpose of this whole entire thing is. So I want to be very, very clear. We do not have a standard on this at this point in time. We do not have an exposure draft on this. What the FASB is precisely trying to do here is trying to determine what to do through this invitation to comment. So they are trying to just solicit some additional feedback on the potential for a standard in this area. And they're asking lots of key questions. The first one is, should the FASB actually standardize some of these definitions for financial KPIs? And if the answer to that question is yes, which ones? Because once again, the FASB currently does not have any standardized definitions. In addition to different KPIs being clearly defined, should we also have disclosures around these KPIs? And if so, what types of disclosures, which entities are going to be required to disclose these items? And another very important thing that I want to point out in this invitation to comment is the scope. So specifically what the FASB is talking about here are financial KPIs, and these include any measures derived from amounts presented in the financial statements. What would be an example of that? That would be the current ratio. That's going to be calculated by using current assets and current liabilities in a classified balance sheet. In addition to those types of measures, we also have measures that are derived from adjusting amounts that are presented in the financial statements. What would be some examples of that? That would be your adjusted net income, your adjusted revenue, your adjusted earnings per share. And last but certainly not least, any measures that are derived from other calculations based on other information included in the financial statements. This would be your very famous EBITDA, this would be your free cash flow, organic sales growth, and any funds from operations. So again, specifically in scope here is going to be any financial key performance indicators. And equally as important, what is not within scope of this invitation to comment? Any financial statement performance measures, any totals, and any subtotals. So what would be some examples of this? Gross profit is actually not included within this. Total revenue, any current liabilities or net income, right? Those are considered to be different subtotals and categories. Those are not going to be included in this invitation to comment. Additionally, any non-financial KPIs. This is going to be same-store sales, the number of subscribers, churn, all of these are excluded from the invitation to comment. And two key things I really want to point out here are some issues when it comes to financial KPIs. The first one is that there truly is a current lack of comparability when it comes to the financial KPIs, and that is what prompted this entire thing. So that is something that is warranted. As part of the FASB's research, when they were looking into different samples of companies, they decided to really focus in on EBITDA. And among all of the companies that were within their samples, it turns out that their definitions for earnings, interest, depreciation, and amortization were all quite different from one another. Some companies decided to include interest income in their definition of interest, some did not. Some companies combined their depreciation and amortization as one item, others did not. There were also issues with non-controlling interest, where some of those excluded NCI in their definition of earnings, while others did not. So there truly is a lack of comparability that is being seen. In addition to that lack of comparability, though, there's also been very diverse feedback from stakeholders that has been received. Some investors do support the FASB, picking out and defining specifically certain KPIs, such as EBITDA. Other stakeholders are more in favor of just an increase in transparency and having more disclosures, as opposed to the FASB specifically defining certain items. And then there's that third category of stakeholders, and they do not like this at all. They don't want the FASB to undertake this project. They feel that even if the FASB does define certain KPIs, that these organizations are just going to continue doing what they're doing, and we're still going to have that lack of comparability, and that it's not really going to be worth the FASB's while to take this on as a project. So just two key issues there that I wanted to point out. But now getting into the different approaches that the FASB is looking at, there are really two different approaches, and this is the first one. The FASB wants to know whether or not they should define and require or permit the disclosure of common financial KPIs. So basically the questions that are asked in this section of the invitation to comment are, which KPIs should the FASB define? Should they do commonly used ones, such as EBITDA and free cash flow? Should they take a look at doing more industry-specific ones? For example, looking at real estate, looking at the retail industry, and trying to do KPIs in more specific areas. And in addition to defining these KPIs, let's talk a little bit more about those disclosures. Should we have disclosures that are required around this? Should they be optional? What are the parameters going to be? What are the guidelines the FASB should provide? So that is option number one, or approach number one rather. And then we have approach number two, which is requiring or permitting disclosure of financial KPIs presented by management outside the financial statements. So this approach, as opposed to having those standardized definitions for KPIs that we saw in approach number one, this would be more similar to the presentation requirements in IFRS 18. And that's when they're having requirements around management performance measures, or MPMs. And another thing that this invitation to comment gets into is just the fact that we could potentially have a hybrid. Maybe we'll have some key elements from approach number one. Maybe we'll have some for approach number two. Maybe we'll have nothing. That's the whole point of this KPI. It's just to get a little bit more feedback in this area. So if you are interested in commenting on this invitation to comment, you are encouraged to do so by April 30th of 2025. And as you can see, very, very interesting area, definitely an evolving area. And I, for one, am extremely curious to see what these responses are going to be as the FASB goes through this. But once again, my name is Jacqueline Vino from Golasso Learning Solutions. Thank you so much for tuning into this blog today, and I hope to see you on a future blog.